In this video, we will talk about the housing market and mortgage crisis. Could a decline in the housing market trigger a recession? And what can be done to prevent another mortgage crisis like the one we saw in 2008? Will house prices fall in 2023? House prices could fall by 10% in the next 2 years, analysts have warned. House prices could fall by 10% over the next 2 years due to rising mortgage rates and the squeeze on household incomes, according to forecasts from the Office for Budget Responsibility, OBR. April 2023's Rightmove House Price Index bucked this trend, finding that property prices were 1.2% higher than the same month a year earlier, according to the property website. This comes after the Nationwide Building Society said house prices had fallen by 3.1% in the year to March, the biggest annual fall since 2009. It's difficult to get a clear picture of what will happen to house prices in the coming months and years. The UK property market grew by 10% during the pandemic, but it now seems this starting to change. Why are UK house prices so high? House prices are falling from their dizzying heights during the pandemic. More on this below. However, they are still very high by historical standards and have been rising much faster than wages. The average price of a UK home has nearly tripled since the turn of the century. Prices have increased by more than 60% over the last 10 years, according to the Nationwide Building Society. On the surface, it looks like the main long-term driver has been supply and demand. So a shortage of housing stock and high demand for properties has affected prices. While this is certainly a factor, low interest rates had also been powering the housing market for years. People were more able to afford mortgages because they could borrow cheaply. This has now changed as interest rates have been rising. Since December 2021, the Bank of England has increased the base rate 11 times from its record low of 0.1%. The base interest rate now sits at 4.25%. This has been in response to soaring inflation, which hit 10.1% in the year to March. Higher mortgage rates have made it more expensive to purchase a home. This has led the housing market to take a knock, with prices falling for 4 months in a row. There was more demand at the start of 2023 following a fall in mortgage rates from their October peak. But prices have been falling, as we explain in the next section. Further rate rises are expected in 2023. This could seriously dampen the housing market because it means mortgage repayments will increase. The cost of living crisis is likely to be the biggest cause of a slowdown in the housing market. As household budgets come under pressure, fewer people can afford to stretch themselves to buy homes. First-time buyers are expected to hold off as they wait to see what happens. This hesitation could in turn impact the market. Have house prices dropped? House price shows that house price growth is slowing and even reversing. This is because demand from buyers has started to wane as their living costs rise. Property website Zoopla said that demand for housing has fallen by between 20% and 50% during the year to February. However, they rose slightly in January following recent dips in average mortgage rates. It said that sellers are discounting asking prices by an average of 4.5% or £14,000 to try to reach a sale. It's thought that asking prices leveled out because sellers price their properties more fairly. They are thought to have been motivated by a fear of missing on spring demand due to overpricing. Below we outline the house price figures from 2 major mortgage lenders. Nationwide House Price Index. House prices dropped 3.1% in the year to March, according to the Nationwide Building Society. This is the largest annual fall since July 2009, as buyers struggle with higher mortgage and living costs. Looking at monthly figures, prices fell 0.8% in March, marking the 7th monthly decline. The average home in the UK is now worth £257,122. Robert Gardner, Nationwide's chief economist, said, "Higher borrowing costs have added to stretched housing affordability at a time when household finances are already under pressure from high inflation." The mortgage rate shift reflects a higher base rate of interest, currently at 4.25%, imposed by the Bank of England as part of its bid to tackle the surge in inflation. However, It also pointed to factors supporting prices, including the shortage of new homes and cuts to stamp duty revealed in the government's mini-budget. Gardner said it will be hard for the market to regain its momentum this year as earnings fail to keep up with inflation and the economy shrinks. Halifax House Price Index. Halifax is the UK's largest mortgage provider. Its latest figures showed house prices increased by 1.6% in the year to March. Growth has slowed from 2.1% in the year to February. It's a significant drop from June's high of 12.5%. Looking at monthly figures, prices increased by 0.8% on average in March. The average house price is now £285,476, compared to £281,684 in January. The lender has said it would be foolish to rule out significant annual price drops this year. There is uncertainty around how much rising interest rates and the cost of living crisis will affect the housing market. The average two-year fixed mortgage interest rate rose to 6.55% in October, though this has now cooled to less than 6%. Here's more detail on the average mortgage rates and how they have changed. This has seen households paying the greatest portion of their income on mortgage payments since 1989, at a time when the rate of inflation is running near a 40-year high. We have more on how to avoid paying too much for a house. Find mortgage deals with our Best Buy tool. Times Money Mentor has teamed up with Kudu Mortgage to create a mortgage comparison tool. You can use it to benchmark the deals you can get. But if you want advice, it might be best to speak to a mortgage broker. This is how the tool works. You can search and compare mortgage deals. It only takes a couple of minutes, and no personal details are required to search. Once you got your result, you can speak to a mortgage broker if you need advice. What are the regional variations in house prices? There are a number of regional variations in property prices, with areas seeing different levels of growth. All four nations within the UK saw a decline in house prices in the first 3 months of 2023, according to the Nationwide Building Society. Northern Ireland fell by 1.3%. Wales dropped by 1.7%. England fell by 1.9%, with East Anglia being the region with the biggest decline. Scotland suffered the biggest fall with a drop of 2.3%. How do prices differ for different types of property? The pandemic caused huge shifts in housing preferences, and mortgage lenders have continued to see differences in price trends between property types. Since the onset of the pandemic, prices of detached family homes are growing much faster than flats. Many workers are continuing to work from home a few days a week, so there is still demand for larger properties with space for a home office. While this hybrid model for working continues, so will the trend for larger properties. Figures from the Nationwide Building Society show that the average price of a detached property increased by 26%, or nearly £78,000 in cash terms, between 2020 and 2022. Looking at just 2022, detached properties increased by 5.9%. Make sure to watch the full video. Let me know in the comment section below. Before you go, please hit the like button and subscribe to my channel. Thanks for watching.